Okay, good evening, everyone, and welcome to a special Sunday night edition of the Anderson Report. And this is, I am Tim the Source Anderson. This is my YouTube channel, The Anderson Report. I also broadcast on Periscope at TJ Anderson 12, and my Twitter handle is TJ Anderson 1. So it's Sunday evening. We're going to recap last week's market action. There's plenty to talk about. It was pretty much a week where we had the market go up the first 2.5 days of the week and then down the last 2.5 days of the week. We had a Fed meeting in the middle of the week on Wednesday that some people felt the Fed could have given a little bit more specifics on their easing pattern for projections for the next couple of years, and also maybe some tighter inflation targets. I kind of think that was nitpicky, to be honest with you. I think the Fed is doing everything they possibly can. I think that the Fed made a very smart move by delineating their interest rate and inflation target strategy in the Jackson Hole speech that Chairman Powell gave a little over 2 weeks ago. People wanted more specifics, maybe on the duration, average duration of bonds they're going to be buying, and exactly what their new inflation targets are. But I just think it was a little nitpicky. Sometimes the market just gets a little, uh, let's say, colicky on occasion. If it doesn't get exactly what it wants, it has a little bit of a tantrum. Um, and I think we saw some of that the last 2 days of the week. And I think when I get into the numbers for what the week did, what the market did this last week, you'll see that the predominance of the selling was heavily concentrated in stocks that had had the strongest gains over the last few months. So um, I'm very happy to have everyone watching the show again tonight. Jen, thank you again for being such a good supporter, as well as the people at Network One. So now we're going to go over a little bit, just touch on what happened on Friday. I didn't do a show on Friday. I had a lot of things going on in Michigan. I'm back in uh, um, my main headquarters in New Jersey right now. We're going to touch on Friday's action a little bit. We're going to talk about what the market did for the week. And we're also going to give some data on what the market has done over the last 3 weeks, because there's a lot of headlines since Friday that market averages have now been down 3 weeks in a row, which is correct. But it's very skewed results. So on Friday, the Dow Jones lost a little bit less than 1%. The S&P 500 lost a little bit more than 1%. The S&P 500 actually closed at just below its 50-day moving average. It closed at 33, just a hair below 33.20. The 50-day moving average for the S&P 500 is 33.43. The Dow is actually still above its 50-day moving average. Although the Dow closed down 0.9%, it closed at 27,650. The NASDAQ composite lost 117 points. That was a little over 1%, almost exactly the percentage decline from the NASDAQ at minus 1.1% is what we saw from the S&P 500. The NASDAQ closed just below 10,800, just below its 50-day moving average. And for the NASDAQ, it was the lowest close since August 11th. Not really that long ago, let's say 6 weeks. And for the S&P 500, its lowest close since August 3rd, about the same metric there, maybe six, the lowest close in 6 or 7 weeks. But let's keep in mind the very sharp move to the upside that the S&P 500 and the Nasdaq had in August, particularly in late August, putting in new highs on September 2nd. Now, when we go to the Russell 2000, this is an average that had trailed badly on the way up after the March lows, and it held up much better last week and on Friday than the other major averages. It lost a little bit less than 0.4%. Let's say it lost a third of 1%, where the Dow, S&P, and Nasdaq lost almost 1%. So the Russell went out at 1536. So on the week, now keep in mind also that on Friday was a very, very, very high volume day for the markets, both at the NYSE and on Nasdaq. It was a what we call a quadruple witching option expiration day, where options and futures were expiring on S&P 500, on the futures for the S&P 500, options on single stock single stock options were expiring, as well as stock indexes, and this creates a tremendous amount of volume, both on the opening and more significantly on the close, given that it was also an S&P quarterly rebalancing day. So what happens is every quarter, the S&P 500 index rebalances their all of the names in their list according to what their market cap is and whether or not it's changed from the prior quarter. So if a stock has appreciated significantly over the last quarter and has the same number of shares out, that means its market cap will go higher. If a stock has sold off during the quarter and has the same number of market shares, its market cap will go lower. That creates a little bit of a buying the winners and selling the losers scenario at the end of the quarter, as the S&P 500 and all those ETFs and market indices that mirror the S&P 500 change their weightings accordingly also. So it's very, very hard and very technical to tell how that really affected stocks on a day like Friday. I know a lot of professional traders that, for the large part, like to avoid trading on days like Friday, because this is really a day for all of the professional index funds and all those funds that look to mirror major indexes to play. And a lot of the professional traders just don't want to try to game it. There's too much bigger money in play on both sides, and a lot of professional traders like to just take the day off on days like yesterday, despite the fact that there's usually very large volume in a lot of stocks. So on the week, I think if we look at what the market did for the week, we'll say, wow, you know what? Maybe it really wasn't as bad as it felt. Because I will tell you that the big gains that were given up on Wednesday afternoon after the Fed meeting and then the Fed Q&A, and then the declines on Thursday and Friday made it feel like it was a rough week. And yes, market averages were down on the week, but not as much as you would think. In fact, I was even surprised when I did the numbers on it earlier in the day. So the Dow Jones Industrial Average on the week lost 8 points. That's like 0.0003%. It had big gains early in the week. It had a big sell-offs later in the week. It lost 8 points, basically flat on the week. The S&P 500 lost 21 points on the week. That's about half of 1%. The NASDAQ composite, almost exactly the same, lost 0.6%. That's 60 points on the NASDAQ composite. Remember, we had pretty good gains on Monday and Tuesday to start the week. The Russell 2000 was outperforming. It actually gained ground on the week. The Russell 2000 gained 2.5% on the week, even though it had declines on both Thursday and Friday. I mentioned the Dow Jones Transportation Average quite a bit the last couple of weeks. It came very close to making new highs early in the week. It did sell off 1% on Friday, but it still had a gain on the week of 1.3%. The transport average is airlines, truckers, rails, some delivery companies. Federal Express, UPS, FedEx had phenomenal earnings earlier in the week. We mentioned that. And the Dow Jones Transportation Average closed at 11,432. The all-time closing high for the Dow Jones Transport Average is 11,571. That closing high was about 2 years and 2 weeks ago on September 14th, 2018. If the transports can keep up the momentum that they've had over the last few weeks and make a new closing high, maybe before the end of the quarter, there's let's see, tomorrow's going to be the 21st, the 28th. There's about a week and 2 or 3 trading days left in the quarter. I think there's a week and 3 trading days left in the quarter, so about a week and a half. And then, so if the transports make a new closing high, it should get headlines and mention in the financial media. So really, on the week, and I think that this is meaningful, because on the week you had the S&P 500 decline just over 0.5%. A lot of volatility. The NASDAQ declined just over 0.5%. But also on the week, these mega cap, mega growth stocks that have been driving the NASDAQ composite to higher highs after higher highs after higher highs for much of the summer, particularly through July and August. Look what they did that last week. Google, it's technically called Alphabet now. They changed their corporate name. The symbol's GOOG. I still call it Google. A lot of people still call it Google. Google down 4.3%. Apple Computer down 4.6%. Apple's the highest market cap stock in the market. Amazon down 5.2% on the week. Facebook down 5.3% on the week. And although it's probably not in the top 10 or 15 market cap names, Netflix down 2.5% on the week. So you would say, how can the NASDAQ composite be only down 0.5% on the week if four of the top 10 names in the NASDAQ composite are all down between 4.3 and 5.3%? Well, you know what? The rest of the NASDAQ composite is doing quite well. We mentioned that on Wednesday and Thursday, the advanced decline stats for the NASDAQ composite were maybe Thursday, there was maybe 4 stocks that declined for every 3 that advanced. The NASDAQ was down 1.3%. Uh, Wednesday, the NASDAQ was down 1.3%. I think there were 3 stocks that declined for every 2 that advanced. These numbers typically would be much worse than that if this was across the board selling in the market. But the selling's been concentrated in the big mega cap growth names, and that's going to affect indexes that are capitalization weighted, like the Nasdaq Composite and also the S&P 500. And we don't talk about the Nasdaq 100 a lot. It's even more tech centric. It's the top 100 market cap names in Nasdaq. It's just a total proxy for the mega growth, mega cap tech names. It had a worse week than the Nasdaq. I think it was down 1.3% on the week, where the Nasdaq overall was down 0.5%. And even on Friday, the Nasdaq's down 1.1%. You had 1,600 advancing issues and 1,800 decliners. So that's almost even for advanced decline stats. On the NYSE, decliners led advancers by 2 to 1. Not quite 2 to 1. So that's just further evidence that, and a further indication that the majority of the selling has been in the mega cap, mega growth tech names that have been driving, and I don't know what Tesla was down on the week, but it was probably down, have been driving the what I've called the internet traffic trade, the significant increased volume in the internet from people working at home, from people doing a lot more streaming at home. I mean, look at what the rally that Netflix had during the first half of the year, and just increased demand on usage through the internet. That was fueling big gains year to date in Google, Apple, Amazon, Facebook, a whole bunch of others that I didn't even have time to really jot down, NVIDIA, et cetera, et cetera, et cetera. But there were a lot of stocks in NASDAQ did not have as heavy a selling, or you wouldn't have these big mega cap names down 4 to 5%, with the NASDAQ only down 0.5% on the week. And so overall on the week, if we look at the 11 primary sectors in the S&P 500, it's split into a little bit of macro theme with consumer staples, consumer discretionary, and then some of the sectors are industry themed, like financials and energy and industrials. So the best performing sectors on the week in the S&P 500 were those that have really not been the strongest movers year to date. Energy up 2.9%. Well, that makes sense. Energy had that one day when it was up 4%. Energy up 2.9% on the week, but the commodity oil rallied from a little right around 37, between 37 and a half, to right around 41. I think it went out maybe just a little bit above, a little bit below 41. That's a pretty good move for the commodity. When you get that kind of a move, it's usually going to help the stocks in the energy sector. And they had a gain. The S&P energy component almost had a gain of 3%. The industrials also had a nice week. Yes, they were off a little bit the end of the week, but they were up much more than that in the first half of the week. They gained 1.5%. The materials, even though they were down 1.5% on Friday, still had a gain of 0.9%. Now, on the downside, financials, which we've talked about from time to time, is very frustrating watching the financials and being an investor in the financials and thinking that they're, watching them have 3 days when they go up and 2 days when they go down, et cetera, et cetera, et cetera. That was the way that energy was acting until maybe this week. We'll see if energy can follow through next week. Financials pretty much flat on the week, uh, down 0.2%. The yield curve is steeper than it was a few weeks ago. I think that Chairman Powell's comments in his Jackson Hole speech, I've mentioned this numerous times, promote a steeper yield curve because he's going to let inflation run a little bit hot. And he's going, even if it gets to 2%, they're not going to talk about raising rates until inflation stays above their benchmark of 2% for some time. And even though Powell is not a Fed speak type of a guy, I think that in Fed chairman vernacular, that means a year, unless it were to really spike. So, but there were some sectors that definitely did not perform well this week. No question about it. Information technology down 1%. That's your NASDAQ internet traffic trade stocks. Telecom services down 2.3% on the week. That's the same. Consumer discretionary down 2.3% on the week. Consumer staples down 1.7% on the week. That's a little bit of a negative comment on the consumer and on consumer spending, with both consumer staples and consumer discretionary being down 1.7% and 2.3% on the week. Again, the difference is consumer staples, pretty much things you need to buy. Food, stuff for the bathroom, paper products, etc. Consumer discretionary, more or less things you want that if things were really, really tight, you didn't have to buy. Stuff from retailers, discretionary items, you pretty much know what that means. So, look, we did have retail sales in the middle of last week, and they were a little disappointing. They still showed some growth. I would say some respectable growth from July, but they didn't grow at the level some people were hoping for. Both the headline number coming in at plus 0.6% versus retail versus expectations of plus 1.1%, and the the X food and energy number of I think it was plus 0.7%, coming in a little light of what people were looking for at plus 0.9%. Again, I'm sure that most analysts and most economists are going to say that the little bit of a miss in the retail sales was because we have gotten nowhere with the stimulus 4.0 plan. Back in the feeling in early to mid August was, oh, of course they're a mile apart, but they'll pass a stimulus before they go to recess for Labor Day. Well, that didn't happen, and they come back from Labor Day, and it still feels like they're quite a ways apart, although not as far apart as they were. I think that the Republicans in the Congress and even the Trump economic team have said we would definitely agree to a stimulus program of 1.5 trillion. And it seems like the last benchmark number that Pelosi was throwing out there was, I can't recall if it was 2.2 trillion or 2.5 trillion. Yes, is $1 trillion a lot of money? But when they were twice that far apart a few weeks ago, um, they're a little bit closer than they were. Of course, I think that the tougher part of a deal on stimulus 4.0 could be what exactly that money is going to be used for. And now it would be interesting to see if, with the Supreme Court issue now coming front and center, and probably will be front and center for the next up until the election, whether or not that just completely throws a roadblock into the potential for stimulus 4.0. I'm not going to, guess on that. We'll just kind of have to look at what the posturing is the first couple days this next week. So we had the Fed meeting, and look, some of the comments on the Fed meeting were ridiculous. The one that I kept writing down and highlighting in yellow was some investors were disappointed that the Fed did not give more guidance on added stimulus or inflation targets. Look, just get over it. I mean, the Fed is doing everything they can possibly do to help the economy from going into a death spiral at the beginning of the coronavirus economic shutdown, and now helping businesses get back on their feet um, uh, through some joint lending programs with the Treasury, et cetera, et cetera. Some people, when it comes to the Fed and or the financial markets, just if everything isn't perfect, they you know act like, oh my god, this is going to be a disaster. It's not going to be a disaster. But people have to have a reason sometimes for the market to sell off, and if it sells off just after a key Fed person speaks, or more significantly after a Fed meeting and a Powell press conference and Q&A, of course people are going to say, well, B happened because of A, et cetera, et cetera, et cetera. Let's just see where we are um, as we get into this next week. A lot of headlines also about the market being down now for 3 weeks. Yes, it is. We were at very, very lofty levels, particularly when the S&P 500 and NASDAQ made their all-time highs on September 2nd. That was a Tuesday. If you want to use the 3-week metric, which was the Friday before August. Now that was before Labor Day. Remember, Labor Day was late, so it was on the Monday following that Tuesday. But we have had a 3-week sell-off in the market averages. The Dow's down 3.5%. The S&P is down 5.4%. The Nasdaq is down 7.7%. And the Russell Composite is down 2.6%. The outlier and the market average that was hit probably the hardest, maybe even harder than the Russell, was the Dow Jones Transportation Average. After that, in the last 3 weeks, the Dow Jones Transportation Average has gained 1%. So, some people in the financial media would say there's always a bull market somewhere. The transports have been acting great, but they are tacking gains on from a very, very, very sharp sell-off. It's easy to say the transports are only acting great because they acted so terrible in the coronavirus sell-off, but they're still just over 1% from an all-time high, and that's astounding. I would just so the railroads are still way, the airlines are still way off their highs. Federal Express and UPS are probably at all-time highs. They've been beneficiaries of everybody ordering stuff online during the shutdown. Some of them deliver for Amazon on occasion and or from other online retailers that everyone's been ordering from. A lot of the rail traffic has picked up significantly in the last 4 to 6 weeks. And the airlines have kind of held their own over the last 2 to 3 weeks, probably a little bit higher, but still maybe down as much as 50%, if not a little bit more, from where they were before this sell off started in late February, early March. I will just mention as an aside, I flew back to New Jersey. I flew through with a connecting flight through O'Hare Airport on Saturday late morning. That was September 19th. I had flown out to Michigan through a connecting flight through O'Hare Airport on Sunday, the Sunday of Labor Day weekend, September 6th. The airport was much busier Saturday morning than it was the Sunday 2 weeks earlier. And I will mention that Saturday is usually a lighter volume day than Friday or Sunday. Now, when I flew out, that might have been skewed by the fact that it was the Sunday of Labor Day weekend. So it might have been Friday and Monday that were the busiest travel days around Labor Day weekend. But I noticed that I had about an hour and a half to 2 hour layover, and I had to go from one terminal to another, which in O'Hare takes about 20 to 25 minutes. The airport was noticeably busier yesterday morning, let's say between 10 o'clock and 11:30 Chicago time, than it was on Sunday 2 weeks earlier. I don't really know if that means anything. It's one observation, but I feel like also both the experiences on two different planes. I would say my flight from Chicago to the New York City area was pretty full, except for the seating in the main part of the plane was 3x3. The middle seats were not sold. Other than that, the plane seemed to be fairly full. So you're going to say probably it's 2/3 full if the middle seat wasn't sold. That's for every aisle, 4 to 6 seats. It was not that way on the way out, but I'll be watching these TSA uh, traffic numbers pretty carefully coming into this coming week. Again, Friday's numbers won't be posted till Monday, and just because it's noticeable that the airline stocks did not get hit as hard as many sectors of the market during the sell-off we had this week. Two positive mentions in the market. Well, one positive mention, General Electric rallied about 15% over a 2 day period of time. They made some comments at an analyst meeting that they expect to be cash flow positive by a much sooner date than some people have been projecting. There's a tremendous amount of shorts in General Electric. Some people think it's going to just be a very, very difficult story for a very long time. Look, the stock was between like $12 and $13.25 throughout January and February. Very, very tied to the aerospace industry. So clearly they took a big hit with the coronavirus stuff. Not nearly the AAA credit, probably not even a AA credit that they were for decades. And it's a long turnaround story, although I think it's possible that the right guy is now in charge. His name escapes me. He used to be the CEO from Danaher. General Electric rallied from 595 a week and a half ago to 688. Uh, that's about close to 15%. It traded above $7 on Friday. I'm sure there was a fair amount of short covering, and I'm sure that some very long-term value investors, yes, there are still some, are probably accumulating the stock. Please do not take anything I say on General Electric or any other individual stock as a buy or sell recommendation. I'm not a registered analyst. I'm just pointing out the news that was in the stock last week and the price action in the stock to the upside, given that I also mentioned a number of stocks in the tech sector that had downside price action last week. One other stock worth mentioning, we had this crazy action in Kodak again last week. Um, we had this situation where Kodak rallied from the mid single digits way up, maybe traded about $50 briefly intraday one day, but hung out in the $20 range for a few days. Month and a half ago on some story that they were maybe going to be a participant in some uh, um, uh, corona in some vaccine play or maybe some therapeutic play. I've talked to some people who say, well, you know what, it's not the craziest story ever out there. And that there was some dispute as to whether or not they were given a contract, they weren't given a contract. Did somebody say they might likely get a contract, but really didn't have the authority to do so? I think this story is a long way from being over. But look, it's a very speculative story that has a tremendous amount of hair on it. If anybody is, and again, I'm not recommending it a buy, I'm not recommending it a sale. If anybody is thinking about just taking a shot at Kodak, it has to be with like extra money that you're okay with losing if things don't turn out and the stock goes back to where it was before all this talk continued. But it did move this week, late in the week, from $6.50 to $12. I'm just mentioning it because it was a stock that had a big move off a story that's been on again, off again for a lot of the last month. So, look, that's all I really have tonight. We're gonna. I'll be on tomorrow, either at 7 p.m. or 9 p.m. I'll let people know later. And we'll have, I'm sure that a lot of people will be watching very closely to see if the sell off that we had the end of last week is going to follow through to the downside at all. I think that there will be some nervous people in the market, but I think that there will also be some potential buyers on weakness if we have further weakness. And keep in mind that the S&P 500 having its lowest close Friday since August 3rd, the Nasdaq having its lowest close since August 11th. You could test Friday's intraday lows. I don't have those levels right in front of me. Monday, maybe Tuesday, and also sometimes when you get these these big quarterly S&P rebalancing days, it only happens 4 times a year, and also the quadruple expirations. We're coming up to the end of the quarter in, I'm going to call it 8 trading days. I'm going to have to double check this, but I believe it's a week from Wednesday. It's going to be September 30th will be the last trading day of the quarter. I think that's a Wednesday. Excuse me 1 minute. Sorry about that. But sometimes you get a little follow through volatility the day after an S&P rebalancing day. that's combined with the triple option, quadruple option expiration. We'll just see. I think we'll have a little bit. I think we'll have some volatility early in the week, um, and you know we'll just have to look at like the key headlines. Any more granularity on whether they're going to have a uh, stimulus 4.0, and also we have this issue coming up in October where we need to the Congress is going to have to raise the debt ceiling. I don't think that's going to be a big issue. I think everybody's pretty much going to agree that one way or another that that is a no-win situation for both parties to play around with that a whole lot. But the stimulus 4.0 feels like it's still a heavy lift to get that done. Okay, I want to thank everyone again for joining the program. I appreciate everyone's support. If there are any new watchers out there, please subscribe to my YouTube channel, The Anderson Report. Hit that red subscribe bar, hit the little bell next to it, and you'll get updates on when the next broadcast is. I will definitely be on tomorrow evening. And the again, my YouTube channel is The Anderson Report. I am Tim the Source Anderson. I also broadcast on Periscope on TJ Anderson 12. And my Twitter handle is TJ Anderson 1. If you come up with any questions or topics that you think are worth commenting about, you can hit me on Twitter. You can put comments, I think, in here even after the fact. But everyone, enjoy the rest of your Sunday evening, and we will talk to you again tomorrow.